In this episode, some of our Banking with Life clients discuss their exposure to the idea that they could control the banking function with the infinite banking concept and practical experience in becoming your own banker, as taught by my late friend and mentor, R. Nelson Nash. Now, these are unscripted and in their own words, so they may not use precise language, but they took time out of their busy lives and their full schedules to come and share with you. And I thought it was very powerful. They were very complimentary of us as a team, the Banking with Life team, and some of the team members, Jake, Julie, Service, and I do truly appreciate that. But those were also unsolicited. I really had fun with all of these individuals, and I think that you'll enjoy. Thank you for listening.
So my wife is born and raised in San Antonio, and we're in the honeymoon period of our marriage, and this opportunity comes up, and I was like, well, I could be closer to my dad. He's living on a transplanted kidney, and I could be closer to my brothers who live in Indiana as well. And I get there, and it's like 2 consecutive of the worst winters I can ever imagine. I mean, like the first day we got there, we woke up to like 10 or 11 inches of snow. Like I couldn't find my wife's Explorer. My wife goes, "Where did you move us?" And so, I did the corporate thing for about a little over 2 years, came back to Dallas, and so then
your flip-flops on, sun shiny.
Yeah. And, but anyway, so in that move to Indiana, my wife's career kind of didn't translate to Indiana. So then, we have our first daughter. Claire was born in the same hospital I was, which is kind of unique, different OB, but same hospital. So it was kind of a cool story. Fast forward, we're back. And so Sarah's kind of like, I want to get back into the working world. But then you have that little gap. And so like any of the single moms or anybody that's out there that's like done the stay-at-home mom, like you can talk to my wife, Sarah. She's like, I've been there. And so we really thought, maybe we should look into a franchise. And so this is kind of where IBC kind of came back to it.
So this is 2018, 2019?
2018. So we're starting the travel business, and Sarah is the youngest franchise owner in their system. She is a star among their peers. And, it's an upward trend. Like it seemed like it was the right thing to do pre-COVID. And we were 60% in the cruise business.
Gosh, travel right before COVID.
Yes.
Oh my God.
Yeah. So we were 60% cruise on our mix. So she pivoted as much as she could and started doing more land-based vacations, like your all-inclusives and whatnot. But yeah, I joked with people, and in an unfunny way, it was like going to McDonald's and only being able to maybe get a tea. And so it was pretty dire when your government says for 18 months plus you can't sell your main product. So we had many nights where we're like, this is nuts. But
so y'all coughed up a lot of money.
We coughed up a lot of money, and I would say funding the franchise was really the trigger. Was the trigger for IBC. So we had the conversation with the franchise partner who helped us find the right fit for us. And he had talked about Rob's program, the rollover for business startups. And so you basically start a C Corp, you take your 401k and you roll the entire amount into this Rob's program, and it is your business. The only way to really get your money out is to liquidate the business. So you're all in if you do the Rob's. And our financial advisor at the time, who Sarah had known since she was in 8th grade in San Antonio, he talked us out of it and said, why don't we just take the money that you need out of your 401k, satisfy the Small Business Administration's 20% that you need to put up front. They'll fund the rest. Well, that bumped us into a higher tax bracket, and that was a nice large tax. And our guy the only response was, "Hey, I'm not a CPA." But
whoa, That's not funny.
It's not funny.
None of this is funny so far.
And so we,
I mean, you're telling it. I mean, you've like got a great attitude, sir.
So so we got the business started. It was not necessarily as easy as if we had been funding our own policies, controlling our own banking function. And I always laugh because if I ever needed even $1,000, I had to give a dissertation on where that $1,000 was going and why I was going to do that. And then there was kind of an argument back and forth, like, why would you do that? And I laugh, the mutual company that I am with, via you, if I need money, it's almost a little too easy because I just request the money and the check shows up in about a week. And nobody's belittling what you're trying to do, or you're not telling them I'm not getting a face tattoo. Like, you don't have to.
Who are you having this dissertation with? Who's this argument?
Financial advisor.
Okay.
Yeah. So
the one that's not a tax. I'm not a CPA.
Yeah. And he's brilliant. I have nothing bad. But also that one of those things is, you really don't need.
It's like you're paying another gatekeeper between you and your capital.
Yes.
Yeah. He's like your alter ego. Do you really need that?
Yes.
Tattoo.
And I mean, sometimes we all do stupid things, sure. but at the same time, it's like you really want to be able to borrow $5,000 and not really have to explain what you're planning on doing with it. So you,
if I could just interrupt, you will never, ever hear me question you on what you want to do with your capital.
Yeah.
Ever.
And
now, if you ask me my opinion, I'll give it to you. Right. Yeah. But I'm not going to, I didn't know face tattoos cost that much. Okay. Sorry.
But yeah. So, and I will say for everybody listening, that is 100%. You do not get a call from James going, what's this money for?
What's the loan balance?
Yeah.
Are you making loan repayments?
Yes.
Yeah. No.
Okay. So my 20-year-old self, I kind of kicked my 20-year-old self for not continuing the IBC journey.
With the mad scientist.
You
fell prey to the noise, you feel like.
I fell prey to the noise.
Okay.
And because there's just so much, this was probably a well-structured, if I had to guess. This was not a, VUL. It was not indexed. It was, high cash value mutual company. So he was, in all intents and purposes, probably set me up with the policy that I would have been very happy to still have in force.
Yeah. You'd have 15 years roughly experience.
Yeah.
Right.
But it was the noise. And I think that's what's so reassuring about this podcast, the resources that y'all are trying to put out there, is just say there's a lot to the story that isn't being told.
Yeah.
So, but yeah, so we had the business, it was going, supporting my wife, and I'm like, let's go. And then COVID happened. I burnt some more cash because I thought the first wave was over. Mm-hmm. We had an older gentleman that we were releasing the space from. He was like, y'all, I know it's a black swan event. He was like, I'm not holding you to your security deposit. He's like, I can get this place rented out tomorrow. He's like, y'all have been great. So he let us get out of the lease. Mm-hmm. Well, that first wave kind of dips. And I said, we've got to get going before commercial space goes up again. Like, now's the time to get back. And so we opened up our second location, which was our primary location now. So we did not have the other one. That landlord was great, did all the build out. It was a great space, kind of improved on what we were doing. And then we had the second and third wave, and just cash was just flying out of our account. And we were still booking vacations, but it was just the income stream was not there. And so at some point we did finally hold out. There was a Frisco location who was 5 years ahead of us and doing pretty well, had a good book of business. So we just took our team and merged with them. And I was like, had that been an option a year prior, that would have been really financially advantageous. But it's, we're past that point. But so fast forward, I get turned on to your podcast, reach out to your team, and I'm like, I'm all in. Let's go. And I would also say the other resources, I brought the stack of books that I felt like Nelson's book, Becoming Your Own Banker, is number one.
For me, this is the fun of this whole thing, because when I understood what this could do, I thought, oh my goodness, why would I not do this in the nonprofit? Because, so let me back up. I collect heroes. So another one of my heroes is Gordon Cosby. Gordon Cosby planted a fairly small church by, everyone's standards today in DC in the 60s. And he developed this amazing community of faith and did all of these amazing things, planted probably 40 nonprofits out of his church, and was able to radically change kind of the face of DC in a time when it really needed God's people to rise up and do radical things to help the poor and the suffering. So he's one of my heroes. I love his story. And on his deathbed, he was able to transition several millions of dollars of money from his nonprofits and put them in exact places where he wanted to see new life, new expressions of God's goodness rise up after he graduated. And I thought, when I heard that story, I thought, I want to be like him. I want to be able to say that on my deathbed, I'm positioning millions of dollars to continue God's work after I graduate. Like, I want that on my bucket list. So when we finally established our nonprofit, because we've been doing this kind of work for many years without the official legal paperwork of a 501c3. So our 501c3, which is Everyday Mission, it is only about 7 years old. So it's starting to get some legs on it, and we really had the mandate that half of the funds that come in go back out to the nations. So we're discipling and we're working with all sorts of organizations all over the world. The other half we are keeping within our purview, and we are saving, because right now we rent spaces or we meet in homes. We don't have our own property, but we know at some point we are going to have our own space, and it will be something that is self-sustaining. So we'll have some kind of business component with it. It's just not going to be a church building that sits there and is just used and funded on donations, right? Tithes and offerings. It's going to be a space that is fully used, but also building income as well. So we knew we needed to save money. Well, I don't want to put money in a savings account at the bank and it makes 1%. That's the first thing. And the second thing, I already have this goal of making sure I can distribute millions of dollars when I die. So I thought, well, let's just combine the two. And while we're capitalizing and saving money, we're just throwing all of that money into the policies for the nonprofit, and it's just cooking away. And we're looking at real estate, looking at things, because when the right door opens up, I'll just go write a check and then we will just pay ourselves back.
That's awesome.
It is awesome.
I'm telling you, I remember conversations that, how do you do that? How do you get the 501c3 involved? How do you involve the nonprofit? And that's kind of the why, so you can give millions away and you're retaining half to build and own and to make it as perpetual as possible, right? And self-sustaining. And then the how is kind of the ownership of the policies, the insurability, who's insurable, where do the premiums come from? Can you get it all past the underwriters? But we didn't have any. I don't recall any difficulty with any of that, getting the policies in place. And
there's something, whoever's insurable within the nonprofit organization, you have to be an asset to the organization, as in you have to have been putting your own money into the organization over a certain amount of time. So if you died and were no longer part of that organization, the organization would suffer. That's how you're able to. So you're not just going to be on a board of some nonprofit and not be financially contributing and think this system will work. You've got to have skin in the game.
Yeah. So there has to be an insurable interest, and is what the industry calls that. And so y'all didn't start the nonprofit to do life insurance and commingle all the tax-free benefits of life insurance and nonprofits or trust and all that, which, you can do all that, but it's a legitimate nonprofit with legitimate cash flows that are historic.
Right.
The board members take salary, or they have a certain amount of time that they've been are participating in the nonprofit. I mean, they're just legitimate activities.
Right.
But that's pretty powerful, when you have a tax exempt entity, right, that owns life insurance, is paying the premium, and is the beneficiaries, and then a modified endowment contract within the life insurance industry, a life insurance policy just, is deemed to move from insurance to an investment. Therefore, the tax treatment of a policy could change if certain things occur. Anyway, that becomes a modified endowment contract. Well, a nonprofit can own a modified endowment contract because they're a tax exempt entity. I'm just pointing that out. There's so many things that you can do. And I believe that the infinite banking concept, Nelson's work can change a family's direction for generations, no question. I'm not saying it's easy, but it's worth
it. You have to be disciplined, right? But
and then, if God's people, if the churches would open their mind or just make an attempt to be exposed to it, you can change congregations for generations. I mean, it's very powerful what could be done. And you don't have to start, in my humble opinion, with great big, the church that has $20,000 a month income and cash flows, or $120,000 a month in tithes. I mean, you don't have to start with these startling numbers. You can just start, right? With the employees, the board members, because whatever the church does or the nonprofit does, it's got to be presented before the board, and the board's got to be on.
Right. Exactly. There's nothing sneaky or hidden about it. It's just wisdom, and it's creating a vehicle or a container so that God's people can be the head and not the tail. I don't want to be beholden to banks. If I am beholden to bank, I am going to have a great deal. I'm going to be able to use the income in the policy to get the deal going. Then I'm going to refinance the deal, pull money back out, pay my policy off, and have that thing, the rent, the income, the business coming from it, sustaining it, paying for it. And then it's a net. Everyone wins.
When I was 18 and for an 18-year-old starting to make some money, I had read some books that were given to me, again, by some really great mentors, and it talked about the importance of tithing. Now, as I look back, some of those books were skewed. There's a few of them I won't give to my kids because they were kind of name it, claim it stuff, and I don't sign on for that. But some of them were very pivotal in developing that best practice, that habit, really being obedient, right? And the other one, thing, you're going to have to edit because I totally went mind blank on the other thing.
A couple of things that you were modeling, the godly men and your parents, and you're young, 18, and they modeled tithing.
Yeah.
And you were knocking it out of the park. So writing goals.
Oh, writing goals. Yeah. So another book I was given was about writing goals, and I had never written goals down. So there I was, living at home one night, finished reading a chapter in the book, and I thought, all right, I'm going to write some goals down. I thought it was kind of goofy, right? It's like first time my minister told me to journal. I thought, oh, journal? That's not, well, I wish I'd have started journaling sooner.
Sure.
Well, anyway, so I write these goals down on the back of my fax machine owner's manual, okay?
Was it a roll paper fax?
It was a sharp facsimile Yes, they got the pink lines when it was almost out. Oh yeah, that thing was brilliant. We had some big deals come across that fax machine, back in the day.
When I met my wife, it was all over the phone, and she faxed me a picture on roll paper fax in black and white.
I love it. I love it. Yeah. Now, if you don't laminate those, they fade, right? You lose your picture, so you got.
Yeah, that one's lost to history.
So I write these goals down, and one of my goals was, by the time I'm a certain age, I will marry a girl with the initials BB.
Stop it.
Okay. And it wasn't because the company was B&B. Okay. That didn't have anything to do with it. The girl that I took a liking for in middle school and high school's initials were B&B. Okay. So I was thinking that at the time, although at the time I wrote that was over. That was torched, and it was good. It was good. It wasn't meant to be, obviously. But I wrote that down on the back of that, and there I find myself 7 years later getting married to Bridget Bailey, who became Bridget Barker. And I just think it's one of those stories. I was just telling a young man last night, I was talking to him on the phone. I said, you've got to write goals down. You've got to do it. So every year we write our goals down and we cover the key areas.
That's really pretty awesome. I mean, that, B&B, and then her maiden name was a B, and then her married name was a B too. That's pretty cool.
So then we have Brooke and Blake, right? So everybody starts to say, gosh, that's kind of cheesy because you're naming your kids after your company. And then I tell them the story. And people ask me too, say, why didn't you change the name of the company? Why'd you keep it B&B? Well, when I was 18 and I bought it, I thought it was going to be too much work to change all the paperwork with the vendors, all the paperwork with the vendors. And so I just left it. So,
do y'all have pets, animals?
None.
None. Okay.
I have allergies, so we don't have pets.
I got it. I mean, that reminds me of like LBJ, Lyndon Baines Johnson, Lady Bird Johnson, and their daughter's initials are LBJ.
Okay.
And they had a dog, and it was named Little Beagle Johnson. Like everything. Anyway.
I love it. Yeah.
And LBJ, I'm not a fan. Okay. He may be, and greatly so. There's history how, he became as powerful as he did.
Yeah.
And you might not like it but you may. I don't know. So anyway, but he's a historical figure, so I'm not taking that away. Okay.
Absolutely. Sorry. Yeah. Well, it's just something, we were talking about goal writing, and it's just something I still do to this day and has been ingrained in me. I think you meet most people that have had any level of success and they've written goals. Now maybe that's not but the statistics on it is crazy, right? Just hitting them if you write them down, period, let alone look at them and actually put some milestones on them.
And think about it.
And and execute on them.
And then actually the action, faith without works is dead. Faith without action is dead. And this is just me talking, it might not happen if you don't have a hand in it, whatever it may be. So anyway, I don't want to sidetrack you. I'm sorry.
Yeah. Well, there's a biblical aspect of writing
no question.
Yeah, for sure.
Right. It reminds me of the three lepers, and they're outside the city and they're like, well, why sit we here lest we die? Let's at least go. And there's the whole story there. It's like, they took action.
Yeah. That's right.
Paul, show me your faith. Show me your works by your faith. I'll show you my faith by my works.
Yeah.
I mean, I believe in
100%
action, works. So
yeah, absolutely.
And I'm happy to say that I continually write goals down and adjust them and improve them. So that's a characteristic and a habit that I relate to. So anyway,
doesn't surprise me at all. It's just it's staggering how many people don't. Right.
It never really dawned on me. I just think people know what I know and do what I do, or think like I think, or what have you. But that, in fact, is not true. And so
another mentor given comment was observe the masses and do the opposite.
Oh, no question.
So there's a lot of advice in that. So if the masses, most of them aren't writing down goals, and that's a key ingredient, you probably ought to do it.
Well, as I am sitting in the assembly room here, doing watch work, I've got the opportunity to sit down and listen to podcasts on the computer. And I like real estate, and I like trying to learn how to work your money a little better or more efficiently. And so, as you know, the Google can fish things out, and all of a sudden I kept hearing this business about IBC and the accolades and the benefits of it. And then the word whole life came up. And I immediately said, no, it doesn't work that way. And, I've got a little bit of background, as you know, with that, because I was raised in Cairo, Georgia, which is where A.L. Williams is from. Mm-hmm. And I think we've had a brief conversation, but I remember when his father passed away. Small town, word gets around, everybody knows everyone. So, but anyway, interestingly, back in 83 or 84, where we lived in Mableton, Georgia, I had some very good friends I went to school with whose father got involved with the A.L. Williams concept. And it was, of course, the motto, buy term, invest the rest. So you get a negative idea in your mind about whole life. And the traditional is not a very good product. But this is very specific. So after I heard a podcast that you and Ryan had done, I wanted to get the book. It came in the mail. About 2 or 3 days later, Michelle and I went to one of our favorite places to be, and that's Disney World. I stayed in the room for 2 days reading this book. She wasn't very happy about it, but I was enthralled. So the more I read, the more I liked. And that's really where it came from. So it is a constant learning experience. It's still every now and then challenging to think untraditionally about how money is worked and handled. To me, James, IBC requires education, discipline, and implementation. And it allows you to escape the contingencies associated with traditional ways of handling money. But you've got to take that step, and you've got to have that fortitude to understand how it works and implement the things that it takes to make it work. You like we all know now, don't be afraid to pay a premium, don't steal the peas, on and on, the tenets. But when you understand how it works and how you recycle your money, it's one big circle, it becomes very apparent that there is no product out there like it, and it enables you to do things you heretofore weren't thinking about. For instance, for us, all of our expenses for the watch business gradually being paid for with IBC. Properties, the costs of them, the repairs, refurbishment, taxes, mortgage pay downs, with the velocity method using IBC. We have uncovered medical expenses, not a problem now. And here's one that you'll love eventually, probably an RV, and go wear it out on the highways.
Perfect.
And I know your sentiment on the RV thing, but trust me, it will not be a brand new situation. Be something affordable. But the list is innumerable, and that's why it's called the infinite banking concept. And it is true that the ultimate goal, as Mr. Nelson said many times, is to funnel your pay right through totally, eventually.
Yeah, that's a hard concept to make sense, and it's a worthy goal, and it's hard to get there. Mm-hmm. It can be a challenge getting there, and especially if you try to take shortcuts. Try to get it all in there the first year, and combining the loan repayments, cash flows of that, and the capitalization, the premium. It's a challenge, or it can be a challenge, but it can be done. Nelson said it took him 14 years to get rid of the snakes and dragons. 14 years, and I don't know that. Of course, I don't know what his ultimate income was, or nor do I know his ultimate premium. I don't know how close he got to that, but if he didn't achieve it, he never got off the path of that direction.
Yeah.
You know, and there's a lot there. A.L. Williams, you know, I know we have spoken about that before because back before 1991, so maybe in the late 80s somewhere, I was exposed to A.L. Williams, right? And then I was all in. I thought that was the greatest thing ever. And, you know, and from 1991 for many years, several years, I went to work with a Fortune 500 company that their motto was buy term and invest the difference, right? And I was told, but I can't document it, but I was told that A.L. Williams was a regional vice president for them. You know, I don't know that to be true or not, but it makes sense. Their whole philosophy was the Fortune 500 company that I went to work for, right? Their whole philosophy was term and invest the difference. And back then in the late 80s, the invest the difference was mutual funds. You know, that's where, and of course, this Fortune 500 company owned a family of mutual funds. And actually the front end load on those bad boys was 8.5%. Front end load. Can you imagine that? Right. And then I remember back in the day explaining the challenge of explaining to people what a mutual fund was. You know, and now everybody owns them today. All their qualified plans are all in mutual funds, you know. But I believe that buy term and invest the difference a very long time.
Well, you know, it beats doing nothing. But there's just better ways to invest. And don't get me wrong, I'm not disparaging anyone that is heavily invested in qualified plans,
right?
Business with banks. All of that beats doing nothing. But can you imagine the billions, probably trillions of dollars out there in banks' savings account that folks have? It's dead money. It's not moving. Money's like a machine or your body. If you don't keep moving it, you're going to atrophy, and it's just a dead end. So, the buy term and invest, that's what I did, and I didn't know anything different. It's that if you follow the government approved plans, you'll wind up in a pretty good situation. And here again, I'm not begrudging folks that do that, but you know, if you wind up with an IRA that's worth $1 million and your money guy saying don't take more than 4 or 5% out, that's not a lot of money per year. Then you've got to split that 12 ways, 12 months, and pay taxes on it. And at nighttime, you better pray that the market stays healthy.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.